Hi there, traders. This is Brad Goodwood with the Daily Market Insight for Thursday, the 26th of October. All right, now just identifying the key theme here. The dollar is up as risk sentiment soars. That's what they're sort of calling it. Treasury yields rise. Okay, but now it's been a long time since I've seen the markets extremely reactive at the moment. Right. So, and what I'm talking about is like the treasury yields are up one day, down the other, and they are having impacts across equity markets, currency markets, and other markets for that matter as well. So at the moment, right, coming out of that North American session, the yields are up, equities off. We've got a risk off profile, euro, sterling, Aussie, Kiwi down, and just about all of the dollar pairs up, right? Classic risk profile. Now, it's not very often I would say to you, right, if you are trading, spend a bit of time in front of the screens and just keep an eye on how things are connecting. But right now, right, it's like the dynamic nature of the market is like the bond markets are moving around almost like currency markets or equity markets. And that's not extremely usual, right? So, but since that is happening, I would be sort of saying to you, you know what, if you have got some time, maybe, and you've got positions in play, we'll keep an eye on the yields, okay, the bond yields, keep an eye on the equity markets, and obviously the impact it's having on the US dollar, right? And obviously the other currency instruments for that matter as well, because we have got a very dynamic market at the moment. Now, when do the bond yields most likely change? Well, they usually change around key economic events, especially the US events, right? So keep an eye on that as we go forward, because if you don't, okay, you're going to sort of be trading in a static environment. And what I mean by that is you could be looking for technical levels and looking for where the dollar direction's coming from. Now, the fundamentals do give us a bit of a backdrop, but with the bond markets basically hovering over the markets and dominating sentiment, that is what we need to keep an eye on. So if you do have positions in play, look for the connection between the bond markets, the equity markets, and the currencies. Now, if you don't understand that, go to the course, the Day Trading Masterclass, and find the section on the connection between the financial markets. It's very important you understand how they connect. So if the bonds go up, what it does to equity indices and say the dollar or currencies, and then you'll have a very good understanding of how this all connects. Right now, we are seeing the dollar come back, right? And this is going to make for an extremely lively session. Once we come into the European and North American sessions today, it's going to be like super buzzing, right? Because we are getting these very active markets. And you know what? When you do understand the connection between the various financial markets, it makes trading a little bit easier, right? And it's not about taking every cent out of the market. It's identifying what the key drivers are. If it is the yields going up, right? If they're going up, equity is usually going down. The US dollar is going up across the board. And that means euro, sterling, Aussie, Kiwi down, right? Classic sort of risk off profile, but driven by the bond market, okay? Anyway, I'm sort of reasonably pumped because this is exciting. It's like watching a game, for me, like watching a game of football, right? And you can see how it's playing out. All right, so let's just come in here to, actually, let me just come back across to one other thing. I was just going to say with the, looking at the main pages here, what am I on screen 2? Okay, so when you have a template like this currency template here, I can just get the pen up, right? So just having a look across the board here, it allows you to see very clearly what the dollar is doing. The dollar is generally going up against everything, okay? Aussie down, Kiwi down, well, half of the CAD pairs are down, Swiss pairs, and the yen pair, well, it's going up as well. Right, sterling down, bit of a mixed reaction there on euro, right? So that's what you can do with a glance at that chart is actually just have a look around exactly what's happening. And that gives you a bit of perspective as you come into saying, well, what are we actually seeing here on the rest of the instruments, right? So, okay, so let's just come back and focus on where the things are going to be driving from today, right? So you come into today's key data, okay, let me just come up here. We'll go top tier and second tier numbers. You don't want to be sort of looking across everything at this stage. Now, we got the EC, like it's a big trading day, Okay, we've got the ECB interest rate decision. Now, this is going to be obviously super important for the euro. We've got some big numbers out of the US, and we've got a whole bunch here as well. And they all come out at the same time. Durable goods, GDP growth, the weekly initial jobless claims data, to list all but a few. So just keep an eye on that as we go forward. Then after that, 15 minutes after the US numbers, this could be the prime time to be hitting the market once we know what the US dollar is doing, and the bond market is look for the ECB press conference, right? And then there's later on, Christine Lagarde has got a speech later on. So this is, as far as the trading days go, this is probably the key component, right? Obviously with the ECB interest rate decision, all the US numbers about to drop. These are all very solid sort of top tier, second tier numbers, right? So you want to be keeping a close eye on that. And when these numbers drop, let me just clear the screen there for a second. Okay, there's a bit of a sequence you need to be doing here. Now, let me just come back and change the back page there. Okay, what I would be doing very closely is, get my pen back up. All right, so as these, well, you can see what the ECB do, but with these US numbers, right, you want to see what the overriding outcome is. Are they stronger or weaker across the board? And then have a look. If you have got like meta stock, like my templates here, keep an eye on the treasury yields, right? If they start, let me just clear that screen again. They start to rally, right? Which means, for those that aren't sure, once again, go through the courses. You can actually get up the curve here pretty quickly. If the prices are rising, means the yields are falling, okay? That's what's happening right now. So the yields are up because they are up overall. But right now, with the price going up, yields will start to fall, okay? So you need to understand that, because what the yield does, just think of it as the US dollar. If the yield is going down, the US dollar is falling. If the yields are going up, the US dollar is going up. So when we look at the numbers here, keep a close eye on the overall outcome, right? GDP growth, durable goods, all important numbers, right? And obviously that initial jobless claims can come into play as well. If anything, it would be a great situation if these came out like 1 or 2 minutes apart, but unfortunately they don't, right? So, and then later on, you've got the pending home sales there as well. So we've got these US numbers, which is huge for what's happening on the dollar right now. And then in amongst that, we've got these ECB interest rate decision, no change of rates expected, so don't jump up and down. And the ECB press conference is probably the more important. But just remember, trading around those events can be convoluted. And with multiple events coming out here out of the US, that can be somewhat tricky as well, because you've got to decipher, like put all these 4 or 5 components in together, work out, is it a strong outcome or weak? Now, if all the numbers are strong, the US Treasury yields will go up, right? US dollar will rally, everything will fall, equity should fall, right? It's easy to connect what's going on. Just don't forget when you are trading, and just because you can get so excited about this, thinking, oh, great, I know what's going on here. I can see where the momentum is. Always look for your instruments with technical levels. Keep a close eye. To me, euro is a classic, right? We've got the ECB plus all these US numbers, strong US numbers, and a pretty neutral to dovish stance by the ECB. Man, euro is going to get belted. And it hasn't broken down through that support line yet. So to me, that's a good one to watch. Dollar Swiss, well, basically the opposite to what happens to euro. Okay, so that's where we are, guys. It's, as I said, it's been a long time since I would be sitting here saying, hey, spend some time in front of the screens. But what I'm talking about is be specific around your time. If there is some data coming out, which we know there is, and you're available at this time, then yeah, maybe have a look at the numbers and see how it rolls out afterwards, right? By seeing what the bond yields are doing, if they're going up, it takes out a bit of the guesswork out of which way the dollar's going to go, right? It allows you to manage positions better and even put fresh ones on if we do have good technical setups. All right, guys, that's a pretty solid wrap there. It's, as I said, this is not the best trade day. It's the most important, because this is where all the numbers come out that could give us direction. So don't go into these trading days thinking this is my best trading day because I'm going to get all these momentum drivers, right? you can run into a quagmire of trouble. But if you can see things happening, that's where it evolves from, and it comes from the fundamentals. All right, guys, have a good one. All the best. Cheerio. And I should say, actually, before I forget, if you have any questions, just jump on the Discord, because we're here to help you, right? This is part of the whole sort of coaching scenario, is to get you guys up the curve. So make sure if you do have a question, jump online. We can get those questions answered for you. All right, good luck. All the best. Cheerio.